What's up guys, Jake here. In this video, let's do another update to my brokerage account challenge. In the event you don't know who I am or what I'm doing, check out that playlist down below. And I'm actually recording this video while the market is open. Because of my job in the Air Force, I can't always be at my computer when I want to be, so it kind of disrupts my ability to trade while the market is open. And I want to get a video out today, so I'm filming this video early in the morning. And the market is looking super red. It's only about 11 o'clock in the morning, but almost everything in the S&P 500 is down. And this is good because I've told you guys in previous videos, I'm sitting on a lot of cash. Currently in my Schwab account, it's saying I'm up about $414 today. On the year, I'm up 89%. Once again, since April, I've been struggling to get past this 46, 47, 48,000 range. And let's go ahead and click on my brokerage account. In my last video, I was holding two additional positions, HCA and Marsh & McLennan, the insurance company. I've since sold to close those call contracts. I just am being very conservative because I feel like we're due for a pullback, and we're in the middle of one. However, traditionally, historically, June has always been a weak month for the S&P 500 for stocks in general. And there's just been a lot of weird events with the Fed board meeting and these inflation index numbers coming out being really high. They're talking about tapering and raising interest rates earlier than previously expected. Basically, the economy is running red hot, and people are confused because they're saying, okay, the economy is running red hot. That's good for companies, good for revenue and profitability and growth. However, the Fed has to do something because inflation is 4, 5, 6% potentially. There's also a labor shortage. There's a lot of conflicting and weird things happening, and the market doesn't know exactly what to do. But when we look at my Schwab account, I'm down to just 3 positions, Adobe, Costco, and Facebook, and I'm sitting on $18,000 in cash. So let's go ahead and talk about my big win for the week, and that was Adobe. I knew that this company was due to pop. If we look at their technicals, going back 6 months, this was a very let's go back a year actually. This was a very well-rested, well-consolidated stock. It ran up huge right after the March crash, peaked at 533 last September, so 10 months ago. And it just kind of traded in this range between $450 and $500, so a $50 range, bouncing up, bouncing down. It then fell below its 200-day, started a new breakout. That's when it drew my attention, and I thought it was going to go higher than 525. I was wrong. It pulled back. Luckily, I bought a call contract when it was below 485. That was a pretty good win on my part. And it's now on earnings ripping even higher. So let's zoom in on the 3-month chart, and on 6/14 it popped up to 556 on anticipation of earnings. Earnings were reported yesterday after bell close, so it's gone from 543 to 562. Now I only unfortunately have 2 call contracts, one with a strike price of 480. Remember, I bought it below 480. I always choose the closest out of the money strike price. The other one's at 560 because I think I bought it on Monday. So the 661, I'm actually currently down, which is not good. However, I think just in general today, the market overall is red. So Adobe will probably be green again on Monday and Tuesday. Let's talk about their earnings report real quick. If you ever want to see their press release for their quarterly earnings statement, you can go on their website. There's usually an investor section. So if we click on the Q2 for 2021 earnings press release, it gives you this PDF. And phenomenal. Total revenue, $3.88 billion, 22% year-over-year growth. Let's scroll down to their 3 months end. So this is their subscriptions, and this is what I'm paying for Adobe Creative Suite, Photoshop, Lightroom, so forth. They also do a little bit of revenue in products and other services, but basically it's this subscription. They're basically printing money. Every time they add a new customer, it virtually costs them next to nothing, and it's almost pure profit. Huge margins on Adobe. So when we look at their total revenue, it grew from 3.128 billion to 3.8 billion year over year, from May of last year to June of this year. 22% increase in revenue. But look at their operating expenses. How much did it cost them to increase their revenue by that much? Now, they have obviously salaries they have to pay, marketing, advertising, a little bit of research and development. But they only spent 1.697 billion last year this time, and it only increased to 1.985. That's only a 6% increase. For a 6% increase in spending, they were able to grow in sales by 22%. This company is bonkers. And this is a very large, mature, well-established, been around for a long time company. They're not burning cash, trying to build a client base like a startup or an IPO. Their market cap is 268 billion. Now, of course, their price to earnings, price to sales, price to free cash flow is still pretty high. But the sky's the limit for Adobe. I really like this company, and I don't see them slowing down anytime in the near future. So I definitely think even if the market is down next week, Adobe is still going to rip higher. Where is it going to go? It's currently at all-time highs, so at 562. So there's no support ceiling or resistance line that we have to break through, which means that sellers are going to step in probably at another nice round number, either 575 or maybe even 600. So when it gets to 575, it's going to be interesting because just with stocks like Adobe, when it gets to these nice round numbers, sellers step in. Now, what I was hoping for is that Adobe, because they've got tons of cash, would announce a huge stock buyback program, or maybe announce they're going to start paying a dividend, or announce a stock split. Adobe has done stock splits in the past, 5 to 1, 4 to 1, 6 to 1, whatever, to get this down from 561. This is a very rich stock. But it just seems like tech stocks in general, like Amazon and Google, they're just saying we're not doing stock splits anymore for some reason. But if they were to announce one, it would immediately start shooting up higher. People, for whatever reason, love stock splits. And since I want to be honest with you guys, I do have to admit something to you. In my Robinhood account, I've kind of been YOLO investing, not with meme stocks, but with other stocks that I've been tracking. And with Adobe, I said, I can't resist this. So last Friday, a week ago, I spent, let's see here, what was my total cost basis? $14,118 on 4 call contracts for October 15th. So I spent a lot of money. I think I only had about $18,000 or $19,000 total in my Robinhood account. But I just said, F it, I'm so confident about this. I wasn't confident enough to do it in my Schwab accounts, put 60% of my account balance in one stock. But in my Robinhood account, I said, let's do it. And it paid off because a week later, I'm up 35% on these 4 call contracts, or I've made roughly about $5,000 in a week from these call contracts. Once again, I'm going to try and hold through next week, hoping that Adobe can hit, what did I say, 575 or 600. Anything above 575, and I'm gonna say I'm pretty happy, and I'm probably gonna exit this position. With Facebook, it's actually down huge today. If Facebook had been up today instead of down, potentially I would have hit 50,000. I would have hit my goal. So I don't actually want to add any positions. We'll talk about that in a second. But with Facebook, it's still not fallen below its 20-day moving average. I still think the fundamentals look great. Their revenue sales from advertising is bonkers, ridiculous. This is a beautiful uptrend. I've got 3 call contracts on Facebook. It's looking solid. Not a good day today, but I think this will have a good week next week and a good month in July. And then finally, my last position is Costco, and this has been a mistake. I'm just going to admit it to you guys. This was a mistake. So looking at their price charts, on earnings, I decided there was going to be a sell-off like many other stocks have done. However, it's now trading sideways, up and down. The uptrend has halted, which is the good news, but I'm holding something that's not appreciating in value. I think I bought this put contract at 478-ish, and I need it to go lower. It's currently at 378, and it's currently at 380. Geez, I mean, I'm just losing the extrinsic value on this contract. How much am I down? I am down only $530. So I'm gonna hold this because the expiration date isn't till October. I think there's going to be a broader market pullback by September for sure. I don't know. I don't know if I want to sell this for a loss just yet. In the event you saw my last video where I talked about doubling up on call contracts in the event there's a red day in the market, you'll notice that we had 2 red days and a 3rd red day. So I'm testing this theory right now in my Fidelity account, and I'll give you guys an update when I have more information. But I'm tempted, once I hit $50,000 in my Schwab account, to just buying covered calls on shares of SPY and then buying calls on red days, doubling up until I can exit my position for a small profit. I would much rather be doing something that's automated, that doesn't require any thought or really checking the market that often. The last 6 months, guys, has been kind of intense, just rummaging through hundreds and hundreds of stocks. If we just look at, what stocks are up today, DR Horton is up 2.5%. That makes no sense. Nvidia up 2.2. This company is so overvalued. Constantly checking these stocks and just questioning the logic of other investors. It doesn't make any sense to me. So I would much rather have a simplified options trading strategy where I'm just trading SPY, one ETF. We look at what's down. In the event you don't know what's up with my Schwab account, I have fractional shares of every company in the S&P 500. So if I sort by biggest gainers and biggest losers, they're all here. I can see how they're performing, and I like Intel. Intel is down 3.49%. I'm going to wait for that to stop falling and then potentially buy a call contract on that. Okay guys, I'm kind of rambling, but just think about all the stocks that I've been in the last 3 or 4 months. The ones I said, this is a clear uptrend, I like the technicals, the fundamentals still look good. Here's Bank of Americorp. It was at 43, it's fallen 38. It's down 10% in the last 2 weeks. Wells Fargo got as high as 47, down to 42. What is that? That's like a 15 or 16% drop. Allstate's, I love this company. This hit a high of 139 and it's now down to 125. Celanese, once again, a great technology company, hit a high of 169. I got out of this last week, but this is now down to 145. All the stocks that I've been looking at the last couple months that I said, this is a good company, this is a good company, they're all, the last 2 weeks, seeing major sell-offs. They're all collapsing. So this rotation 6 months ago that went out of growth into value or cyclical, industrials or the banks, they're now swinging back to tech potentially. So I'm looking at what tech stocks interest me. And Apple, almost down 1% today. Apple's looking solid. If for no other reason, their tremendous stock buyback program, buying back billions of dollars worth of shares this quarter alone. In addition, they've got so many great products coming out, and it's looking well rested. Look at these moving average lines. It shot up huge last year. It peaked at 143, but it's been consolidating for almost 6 months, and Apple's a very good company. I wouldn't count them out. Same thing with Microsoft, and Microsoft, objectively, in my opinion, is overvalued when you look at their historical P/E, price to free cash flow ratios. That's why I've been avoiding it. But how can you fight this uptrend? Microsoft just looks unstoppable when you look at what it's been doing the last year. Anytime it gets below its 50-day moving average, I think you just gotta stop fighting it and buy it. It's currently kicked up, but if there's a pullback ever below its 50-day moving average, I'm gonna just concede and say, all right, Microsoft, you're too good. I'm gonna have to buy you now. So to wrap it up, guys, once again, I'm sitting on $18,000 worth of cash in my Schwab account, and I think next week is going to be red. I think the S&P will be, on average, lower than where it is right now. So let's see, it's at 4,181. Yeah, by next Friday, I think it will be below that. There's going to be some green and then some more red. And next Friday, I'm going to look at it and take some new positions to hopefully get above 50,000 and put my money to good use. When you think about, for example, this market pullback, it went from 42.32 to 4,063. This was only 3 red days, and it dropped all the way down to 4,063. So yeah, the market's not even below 4,100. No, I'm gonna keep holding my cash until I feel like there's a irresistible buying opportunity. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. In addition, if you have any comments or questions about what I'm doing, let me know down below. I love hearing from you guys. Till the next video, take care.